Alright guys, 5 o'clock here in London. Let's have a look at the different moves in the market today and for the week as well. But let's start with the main event of the day was non-farm payrolls. So a weaker than expected report, but nothing too terrible. But the main reaction was US dollar weakness, gold pushing to the upside, and safe haven, so T-notes as well. As you can see here on my chart, that's the reaction here, 130. The euro breaking above R1 and then testing the R2 level and then pushing to the downside, because a few minutes after that you had ECB sources talking down the euro, delaying the QE exit again, so similar as the sources that we had yesterday. So then you had the complete reverse of the move to the outside, and then after that, for the rest of the day, euro pushed to the downside, broke below the pivot level, managed to go all the way down to the S1 level of the day, and now we're just hanging around the pivot. So if you have a look at the reaction in the other assets, so gold, non-farm payroll 130, as you can see here, gold pushing to the upside, trading just before 130 around the 1325 level, and then managed to take the high of yesterday and just stop the move to the upside a few ticks away from the R1 level. And then T-notes, really similar pattern seen in the T-notes. If we have a look here, 5 minutes candlestick, T-notes trading around the pivot before the release, managed to break R1 and then stop R2, bang on the line. And then after that, because it was a weaker than expected report, but it was not a terrible report, you've seen the complete reverse of the move to the upside. So T-notes retracing all the way down R1, all the way down to pivots, tested the S1, then bounced back up all the way to pivots, and then traded down to the S2 level of the day, 126.19. So yeah, bad, what was an expected NFP report, but nothing too terrible. So let's say quick reaction to the upside that has been reversed a few minutes after. If we have a look at the different assets for the week, let's start with the euro. So euro this week started pushing to the upside based on US dollar weakness, following the different tensions between the US and North Korea, and the fact that North Korea launched a missile that flew over Japan. So dollar weakness, risk-off scenario. Euro trading higher Monday, Tuesday, and for the rest of the week just retraced a little bit down. Really similar patterns in the pound. So a bit of dollar weakness at the start of the week, so the pound as well pushing to the upside, not doing too much Tuesday, Wednesday, but then on Thursday, yesterday, you had some news regarding the negotiations between Brexit, so the UK team, and the European one. And then just to sum this up, well, they're not really going anywhere with the negotiations. Don't really manage to get any agreement done. So that weighted on the price of the pound. So we took the 129 psychological handle, broke below this one, took the low of the Wednesday, and then just stopped the move to the downside at the S2 level. So that was for yesterday. And today the pound pushed to the upside based on the USD weakness following the weaker than expected non-farm payroll reports. If we have a look at gold for the week, just make this chart a bit bigger here. So a bit of push to the upside following the North Korean tensions. So safe haven pushing in positive territory, and then didn't do too much Tuesday, Wednesday, and then yesterday gold pushed to the upside again, and then the move that we're seeing today following the non-farm payroll report as well, gold T-notes pushing to the upside. Equity market been really quiet this week. So a bit of risk-off tone seen at the start of the week. So the equity pushing to the downside. As you can see here in my DAX charts, gapped lower at the European Open. Similar pattern seen on the S&P, center right. Just make this a bit bigger here. Equities, S&P here, gapped lower when we opened on the 29th. So that was last Tuesday. after the Korean missile, and then slightly recovered, and then ending the week in positive territory for both the DAX and the S&P. And then finally, if we have a look at oil, so oil here, start of the week following the hurricane situation in the US, with all the refineries in the Texas area closing down, and these refineries, they produce the gasoline. In order to produce gasoline, they need the crude oil, but then because these refineries closed down, the demand for the crude oil diminished, hence the move to the downside seen here in oil for the first half of the week. And then yesterday we had some news regarding the potential reopening of these refineries, so then the demand for crude oil in order to produce gasoline would therefore pick up again. A big move to the upside seen yesterday afternoon, so we're trading around the pivot in the morning. Then we managed to break above R1. We also took the high of Tuesday, 46.72, and then we managed to break above the 47 psychological handle, and this is where we're trading at the moment. So yeah, interesting week, weaker than expected non-farm payroll reports, but nothing too terrible. So then a bit of knee-jerk reaction to the upside for seeing the euro, safe haven as well, so gold and T-notes pushing to the upside, and then they recover the move pretty quickly. And then some ECB sources as well today, talking down the price of the euro. Okay guys, I hope you all had a good week. Enjoy your weekend, and I'll speak to you next week. Thank you.